How to avoid early entry in trading. This is a major concern in trading, and this is one of the major issues a lot of traders are having, including you watching this. So, how do we get to avoid early entry in trading? I'll be listing out four major points which will be taken home today to actually what help us avoid early entry in that setup you're about to take. Now, the first one on the list is directional bias. Directional bias, a major time frame or from a higher time frame, Then second on the list, to presence of what liquidity or inducement. Third on the list, trading from extreme order block, identification of what valid order block. Valid change of character or valid break of structure. That will be the fourth one. These are the 4 points we'll be working with. And from the first one, we said what directional bias from what a higher time frame. Second on the list is what liquidity or what inducement. The third one is what trading from what extreme order block. Then the fourth one is what identification of what valid change of character or break of structure. Now let's take out this, and I will get to what explain this point one after the other before what going into what a real life chart market. So let's push this aside. So we have this. The first one is what directional bias from what a higher time frame, because a lot of times a lot of people don't actually what understand when you have what internal structure or internal break of character, internal break of structure or change of character, and they go ahead to actually what to mark that as maybe a valid change of character or break without knowing that that's internal structure. So the first one is what directional bias from the higher time frame. So let's assume we have this, and this is the main time frame. This is like the chart on the 4 hours. This is the chart on the 4 hours, and on the smaller time frame, you're seeing something like this: price pulling up and price takes out this low. Now, a lot of people will want to. This is the mistake a lot of people or a lot of traders will want to go ahead to do. They'll come to this point and mark here as what their order block. They'll mark that as their order block. So they'll mark this point as their order block. Now, coming to mark here as your order block, you have no inducement. You have no inducement before this point. So if price should return back to this point, you shouldn't be expecting this. What you should be expecting is maybe price rallying toward the extreme and what continue to the downside. So this is one of the mistakes a lot of people get to make. They don't actually what understand what directional bias. They don't understand the directional bias. Now another mistake some persons or some traders will be making in this scenario is what they will have this. Let me give you another example. Let's look at another example here. So you have this price action, and price takes out this low, giving you what this inducement, and price continues to the downside. Now you now have another price action this way. Price pulls up, giving you what internal what change of character at this point, and within this time price is what trading to the upside. Now a lot of persons will see this particular setup and they'll be anticipating that what we are bullish, forgetting that what from the higher time frame general bias, this is what a supply zone, and this supply zone is still intact. So whatever you're having here is what just internal price movement towards this point. So what you want to see is what price taking out this engineered liquidity, this which can also be what your inducement at that point. So what you should be anticipating for is, instead of you looking for what more buys or whatever buys you are taking along this point, you should make sure you're out of the market at this zone. Out of this zone, you should be out. So this is what we want to see. We want to see this continuation of this price to this point, and price should collapse to the downside. So this is how you're able to actually what? Use your directional bias on the higher time frame in favor of your trading or gaining more profitability. So adding your directional bias and what, with the confluence of what, your inducement or liquidity with the overall trend, it's a plus. Now, if you look at this point, number two, we said what, extreme order block. If you look at this point, there is another block at this point. We have order block at this point here. We have this order block here. And why didn't we trade from this order block? Because we know that what, this is an inducement zone. This order block is given to actually what, lure unprofitable or newbies or upcoming traders into the market before what, going in the what, main direction of the market. So when you see this type of order block, avoid this because this is an inducement. So price will take you out at this point, come into the main extreme order block before what, going toward its direction. So if you had a change of character at this point, if you had a change of character here at this point, it doesn't mean that the market is now what, bullish. So on the internal time frame, this is what, a change of character within this internal price, but overall we are still what, bearish. So let's go to the charts, then get to see how we'll be using all of these confluences I've listed here. Don't forget, we said what, number one, we want to see what, the directional bias from the higher time frame. Number two, presence of liquidity or inducement. Three, trading from what, extreme order blocks. Then the fourth one, which is the last one on the list, is what, identifying what, valid change of character or break of structure. So let's go into the chart and we'll get to see how to actually what, use this to actually what, avoid early entries and how to what, increase what, our profitability rate in the market. So let's go. So here we are on NZD CHF 2 hours time frame, and I want us to actually what, look at this price action on this chart, watch carefully, and what, do well to listen carefully too. So now let's look at this price action, looking at this price from this high here. Let's study this price action. So at that high, that was the last high we had at this point, and this was the low that was taken at, giving us what, a break of structure at this point. After having this break of structure, what did we have to the downside? You see, there was a crash to the downside. Then what, we have another what, break of structure at this point. Price gave us another break of structure to the downside. So we have a new high at this point. We have this high at this point. And for the fact we have this break of structure, a lot of persons will consider this point as what, their order block. They will consider this as what, their order block. And what did you see? Immediately price ran into it. It took out this order block because this was not a valid order block. We have liquidity resting at this point. We have this liquidity resting at this point, and we want to actually what, look for what, valid directional bias. So if you look, this is the overall trend from this high to this low. We are still what, bearish. We've not changed what, bullish. So for us to actually change bullish, we have to take out this major high. So this is what we'll do. We'll get to mark our order block at this point. Mark our order block. So this supply is still in control. What can you see to the downside? If you look at the down here, you see this low was taken out at this point. So for this one, this supply has been taken out. This order block has been taken out because what? It was not valid. It wasn't valid. So let's get to see the price action in its correct form. So the internal structure here, you have what, a change of character here. You have this change of character sitting there. And why do we have this change of character? This was what? The high, and what? This was the low. So now we want to see price come back to this point and continue to the upside. And that's why we have the concept of what? Inducement. Having this other block here that gave you this change of character, having this other block without what? Any form of engineered liquidity or inducement, this other block is invalid. Isn't valid. If you actually want to understand how to mark your other block properly, check out the videos on the channel where I talked about what order block and inducement. You will get to actually what improve your knowledge on marking the right order block. So let's go ahead now. So at this point, you now have another word change of character. You have this change of character sitting here because what the price took out this low again. So let's get to look at the price action more. So the price pulled back up again, giving us what another what change of character. Another change of character here, sitting there. So after having this change of character, the price pulled back down again in its opposite direction, which gave us what another what change of character to the downside. Before what price finally reversed to the upside again, giving you what another change of character to the upside. You were to follow up properly. After having this change of character, what did you notice? We had a new what? A new high at this point, and this high was taken out here, giving us what? A break of structure. We had a break of structure here. And what did you notice? When we had this push, you see, we had this great momentum to the upside, and what we have this inducement at this point. Because now, why is this an inducement? If you see, we had this other block, we have what a fair value gap. Price broke structure to the upside, which is what correct. But what did you see? Price came, took out this low. So if you don't actually what understand inducement, you end up being what the liquidity in the market. So these are inducement. These are inducement. And what did you notice about this other block? This other block swept liquidity below this low, pushed up, gave us this inducement. Then what? We have this nice other block sitting at this point. And what did this? Immediately market retraced into this point. Don't forget that price hasn't tapped into this as supply that we are waiting for. So within the internal structure, we are still what? Bullish. We are still bullish because we've actually had this change of character at this point, giving us this break of structure. Then what? Inducement. Then immediately price ran into this zone. Let's assume we actually what? Place this trade. Let's say we'll place this trade. So this is what we'll have actually what done at this point. Put this as our buy order, stop loss below at this week. Probably what will target this high. And what did you see? Immediately price tapped into this zone, the other block. Price ran all the way to what our supply. And what can you see? If you see from this particular supply we drew here, you can see that what we have this whole momentum to the downside. Price was yet to fill this other block, and this is what the directional supply zone. This is the directional what supply zone I was seeing control. Overall, the price was bearish. Don't forget, the price was bearish. So whatever we had within this one was like the internal price action towards for price to actually what engineered liquidity to this point. Now, if you look to the left hand side, what can you see? You can see that what we have imbalance at this point, and this imbalance is what actually what validates this other block. If you also notice, we have what all of this liquidity sitting at this point. So we have this liquidity sitting at this point, and that was what the market actually what came into. And immediately the market got to the supply. Let's get to see what our sell order will have looked like on this particular trade. So placing the sell, stop loss above the candle wick, and what you target the low. Target this low. and you can see that what the price tapped into it, and immediately what the price crashed to the downside. So next time when you're actually what trying to take your trade, always try to consider what your directional order flow. Where is the price coming from? Are we in a bullish market? Are we in a bearish market? Then try to look out for what your inducement. Do you have inducement before what your order block? Do you have inducement before your order block? And always make sure you try to trade from the extreme order block, because a lot of times when you have this type of order blocks, this type of order block we have here, like this one here, look at this order block we have here. A lot of them will have this type of order block. You see price use this order block as what an inducement. So you need to actually what understand inducement properly, understanding what liquidity properly. It will help to actually what improve the other blocks you take trade from. So we had this other block and this one, and what did you see? Market swept this one. If you see when market came into this other block, it acted like it was going to take a buy before the market was dumped to the downside. And what did you see? Immediately it tapped into the what extreme order block. You see price reacting to the upside. Now look at this point. Let me take all of this out, then we'll look at what will have actually happened for those taking what early sales. Now let's get to look at this price action from what the sell aspect. So we have this break of structure to the downside at this point. Look at this. We have this sell, we have this break of structure here. A lot of persons will come to actually what mark this point here as what their supply zone. Why are you marking this point as your supply zone? They will consider this high as what their inducement. But what there is no fair value gap, there is no momentum coming from this zone compared to what you have at this point. And you can see we have fair value gap on this point. I don't know if you understand. So this fair value gap and this momentum to the downside is what validates that this point you're actually trading from is what an inducement. And what did you see? Price reacted to it a bit. The price came back, took out this high. After taking out this high, what did you see again? The price has actually what also took out the low. And here is the low that was taken out at this point. So after this low was taken out and this high was taken out, price crashed into what the main order block at the down part before what continuing to the downside. Now a lot of persons, when they will also actually see this as what their change of character, and upon seeing this as a change of character, they will want to take a sell from this zone. They want to take a sell from this zone, but overall this low hasn't been taken out. This low is still what protected. So what you can't actually be looking for a sell from this, because this low, this high isn't what protected. We need this high to actually what take out this, and that's why what this zone was actually what the valid order block, this one. So next time when you actually want to take your trade, or the next time you want to place that trade after this video, do well to check all of these confluences mentioned or listed in this video to actually what help you to actually improve your trading and actually what increase your win rate or profitability in the financial market. Thank you for watching this, and do well to hit the subscribe button if you actually what got value from this video. Do well to like and share with your friends to actually what gets to benefit from this particular content. See you in the next one. Bye for now.